as you can see on the screen, hopefully. Can somebody tell me you can see the screen? I am, Mustafa says we can see and hear. Okay, so this was a webinar I was a guest on with Etienne Crete last a couple of weeks ago, and I shared it with the membership area, and quite a few folks have joined us recently having seen that webinar. And all the thing about it was trading from daily charts, full-time income, not having to spend too much time in front of charts. So that's the concept of what we are doing all the time. And yet folks were starting to get a bit of a wobble the middle of March. Ooh, Ashley had a losing week. Yes, he lost 1/4%, I think. And then we had another week which was a bit tricky. And yet by the end of the week, at the end of the month, I'd managed to have a very good month. I made over 6%, which doesn't sound a lot, but we'll come on to that in a moment. So I sent this out yesterday. It's spookily accurate entry on the pound yen and the S&P 500. And I actually shared this setup with you on the pound yen last week. So this was my update yesterday. If you've not seen it yet, go back into my blog. And I said a late flurry for the month, and I've smashed my month's target. And then I got an email from a new member yesterday saying, well, that's not very, the gist of it was, well, you haven't smashed it, you've only made 6%. The whole point of all of this is that what you need to be focusing on, if you're completely new, is to focus on this as education, learn how to do this properly. And if you're going to go onto any kind of account, I recommend A, do not go onto a real money account until you really know what you're doing, and B, go onto a funded account. And the funded accounts now are a lot better than they originally were. Originally, they were set out to catch everybody out, and the rules were so twisted and perverse that anybody could fail at them. And most people did fail, and the companies doing it made a lot of money. And then FX2 came along, and I think they helped to shake everything up. And so here, this is FX2s. They have an offer at the minute. I've just emailed David to tell him that the chart's wrong. The profit target is 8%, daily drawdown is 4%, overall drawdown is 10%. It used to be that you had to make 10% in a month, which meant that everybody over-leveraged, over-traded, and then lost money, and then had another go and threw more money at it, more money at it. Now it's come down a lot, and also Americans now, Wanda have started to do it. So you actually have a broker, a legitimate broker, who are offering the same thing, and you can do with them, you can do a 5K challenge for 35 bucks. The reason why I'm talking about this is that when I talk about making 6.25% in the end for the month, it doesn't sound a lot. If you're only on $1,000 account, then you've just made $60. It's not worth the effort. It is worth the effort from an educational point of view, but if you were doing it on a $100,000 account, for one of these prop firms or eventually for clients, then suddenly it gets very interesting. And at its peak, I was trading multi-million-dollar accounts. At my peak, I was trading 7 million plus. So you imagine 5 or 6% on 7 million gives a significant profit share. And for that, my average profit share was 30%. So the client got 70. If it was less than 100K, it was 35%, and up to a million, it was 25%. So that is the way you need to think about all of this. So on to this then. So at the beginning of the month, I posted, and it's really weird. Another thing that's really weird this month, I haven't had a good trade on the yens for months and months and months because they set off without me and I missed them. And I even had the win. Yesterday's win was on the pound yen, which I generally hate with a passion. But that was from a setup, as I say, I shared with you earlier. So yesterday, sorry, on the 5th of March, I pointed out I'd made 240 pips on the dollar yen. It had been planned the week before. It was an A grade, an A plus trade. Multiple reasons, at least 5 reasons. It pulled back in, made 240 pips for it. That was a great start to the month. During the rest of the month, I had a few little trades. I had a trade on Swissy. I was active in stocks. So this was some of my Telegram messages going out to members of my investing site, talking about if I was just starting in crypto, what I would do. And also I'd bought a bit of, what did I buy? I bought some Amazon at 205 average and another order at 171 and a stink bid at 160. So I'm basically saying if it tanks, I have levels set going down. and I was not piling in with everything. So I was going in with, say, let's say I was going to put 1,000 in each of these. I went in with 500 to start with, and then I have orders set lower down at 250 and 250. So I shared all of that with you. That's in a live training session. Once again, this is in my crypto and Mark's blog. If you're new and you're not sure where everything is, you go to home, and on the home page, if you scroll down, oh crumbs, why is it doing that? Oh, don't break every page now. If you go in here, you can see all of my previous posts, and in here you can see the previous live sessions, and also live sessions are in here. Ashley's kept up to me in that bit there. So if you go into here and read more, you can find all the recent posts going back years. You find the 5 most recent in here, and then further down the page, you can start to go. And I said it's been tricky. I'm talking about financial crash, how to survive it, talking about Trump and the fact that since he got elected, I explained it's going to be a wild ride, and it is a wild ride, and that's why we need to be patient and disciplined. And then I talked about gold, the update, and what I'm doing for the next big cycle. So all of that you can find in here. Then on the 17th, I talked about some more potential trade setups. I was talking about the upcoming, at the time, some red flag news that was coming out. And I can't remember what else I had on here. But again, we're sharing these with you all the time in advance. And then here, there was the one I was explaining about it being a wild ride, and also about keeping out of losing trades. So I was saying not to short the euro at the top because we didn't have the multiple reasons. I was also reminding folks, hey, it's been tricky. So middle of the month, things are not going great. Everybody's getting fed up. Oh, this system strategy doesn't work. I'm off. I'm going somewhere else. And then suddenly we start to think, well, okay, we've got a crash going on. I bought some new ETFs, some crazy ones that are paying me a dividend of about 3% a week, which is nuts. And I shared that, and that is in this post here. I also talked about hedging the portfolio. I've hired myself a mentor to teach me options. I've spent so much time reading books and going through YouTube videos and all the rest of it. I have bit the bullet, and I am hiring a mentor to teach me exactly, and then I will be able to help you later on with those as well. Options, I am looking to make more profit on things like MicroStrategy last year that we made so much money on. Could have made a lot more with options. I also want to be able to short when I own a stock rather than just shorting ETFs, could make more, and also using puts to hedge my overall portfolio in case of a crash. And I have bought a few puts, which I did mention in here as well. So all of that is in a step-by-step tricky trades and how to trade ranges. So this is the one for the pound yen. So if you go back into the video here, I showed you that the pound yen was in a range. And I explained that shorting at the top was too risky because if it just set off without you, and we didn't have multiple reasons for the stop. And I also explained in this video why I was putting 2 entries and 2 stops. And again, you can see the result of that in the update video. And in fact, let's have a look at the chart now. So this is that pound yen. What I was saying with the pound yen last week, on the daily, it was very messy because we were just ranging up and down, up and down. So what I explained was, and go back and check the video out so you can see it in real time. I think the price at the time was coming up here. What I was saying is you can't short at the top of this range because where the heck are you going to put the stop? You basically stick your finger in the air and see where the wind's blowing, but there's not enough reasons. And had you shorted at the top, that was a 107 pip move, which you would have probably lost. So back to this, I showed you where I had 2 entries in the same place. Can't remember exactly now, you'll have to check the video out. I had one stop, let's say, in here and the other stop in here, and I explained the reasons for it. Another thing about this as well yesterday is that's particularly good is the fact that because I took partial profits here, and why did I take partial profits here? Well, clearly it had been resistance and support. It done the daily range. I think by the time it got up here as well, I was getting on. Oh no, it didn't do the daily range, but I was getting twitchy. So I took, I think it was half of the trade off at that point. The S&P was not a standard M2. It was more fundamental and technical, but I had a very good trade on the S&P 500 yesterday. But again, I got out here. I took 60% off here. It's a double bottom. Price previously, when it came down here, bounced to the pip off here, and therefore it was probable it was going to go off. So I took 60% off here. I moved the stop here, to lock in another 100 pips. I can't remember now. And then I got taken out on the rebound. So again, taking partial profits, bank the profits when you can. Everybody was thinking yesterday the S&P was just going to continue tanking. It didn't happen. And this was a big clue, probability-wise, it was probably going to struggle. Had I left this, I would now be sat cursing, because instead of having a 3-1 win, I would have got taken out here on all of it. And then another thing on here. Oh, dollar yen. So this is that dollar yen I showed you from a little earlier. So originally, this was the first time we took the dollar yen short, and then we took it again in here and here. And Ashley did better than me the first time, I think, or when it came back into here, he got a better entry than me. I think I got 50 odd pips out of it, took the profit, and it came back and took me out on the balance. Did it again, caught some of the profit, didn't catch all of it, and look at this nasty spike as well. Came back all the way back up 130 pips. So anybody who's hung on all the way down here, thinking, woohoo, we're off to the moon, and suddenly we're 200 pips, oh crap, now we're only 50 pips up. So get in the habit of taking partial profits is another big lesson to learn. Any questions so far on any of that? I'll have a sip of my tea. And it is Tuesday morning, and it being Tuesday morning, the Amazon man no doubt is due to turn up any minute now. And despite the warning not to come. No questions so far. So you're all comfortable with being patient and disciplined and sticking to the plan, yes? Yay, everybody says yes. And then I spoke on the 19th, I was talking about the next big cycle. What am I doing next? So I've been actively buying for the last few months more gold mining stocks and silver mining stocks. And again, I've explained this to you for the last 2 years why I've been doing it, but there were opportunities in recent weeks when gold was at all-time highs here, and we've just made another new all-time high today for fundamental more than technical reasons, which I've explained ad nauseum. But some of the gold mining stocks were still lagging. And then silver is still getting hammered down, and it happened again on Friday. If it can break through this area here, we could be off for a serious run on silver. I wouldn't be at all surprised if it pops, that it pops straight to 40 bucks. Could be wrong, not financial advice. But this is being held down by the banks. Now, I do have a question actually from one of our members, and he was asking about the suppression in the silver market. And I did share a really good article with you the other week, which is this one. And this is explaining brilliantly how it works, why they do it, how they do it, and the fact now, and this is showing on, I think it was a daily chart. This is how the central banks, the hedge funds come in and try to force the price down. But they're coming to a point now where there's not enough silver to fulfill these contracts. Most of these contracts are just paper trades, and they've been leveraged, and the Bank of England's in a mess with it as well as. So have a read of the article for that one. And then where did I get up to? So this was the video on trading the ranges. Showed you exactly where I was entering. I showed you where I was putting my stops, and then I've shown you in the update how I managed the trade, how I took off a chunk of the profit and then left the balance to run, and the balance got taken out. So start of the month, end of the month, it was the yens. It was a couple of decent, or 3 decent trades and a few little ones scattered amongst it. I had a half decent one on silver at one point. Made a month's target, less than 10, probably 8 or 9 trades, and that's a lot for me in a given month. I am only in this to make money. I am not here to sit and trade all day long. And so again, when I was talking about these different things, so in here you've got, these are ETFs. So if you don't want to do this yourself, you can consider buying an ETF. And this is VanEck Vector's Gold Miners. So it is a bunch of gold miners. That was the buy point. That was an M2 breakout and a pullback. Perfect technical setup. You're looking at, I only buy a stock if it can do at least 25% in a relatively short space of time. So it was tight on that one. I don't buy these ETFs. I buy individual mining stocks because I find it to be more profitable. But if you don't want to spend the amount of time that I do doing it, then consider ETFs if you get a significant pullback. You've then got junior miners did exactly the same thing. Junior miners came back, did an M2 breakout pullback. That wasn't as great a potential, but it has now made 20% as well as. Think on, the price of gold is going to all-time highs. The people who dig it out of the ground and who own it in the ground, and I said this to you a month ago, to me, gold and silver in the ground are currently at a discount. And therefore, the miners, a lot of the miners are not particularly well run. A lot of them were not making money, but if they can't make money when gold is at 3,000 plus and silver's at 34 bucks, then they are likely to get bought out by one of the other miners. JDST is an inverse one. I used to use this sometimes. So if the price of the miners is dropping, you can buy this to hedge. But that's why I'm studying options at the moment. This is another one. This is a junior silver miner. I mean, it's down. Need to know a bit more about this one. I'm not sure why it's down, but came down yesterday. Would be 20%. So have a look. And this was a previous one where I've said to my investing group that was an area to consider, because at that time we'd had a breakout from here. But these are all M2 trades, breakouts, pullbacks, all of it. But the difference being with the stocks, my fundamental bias is the first part. And the fundamental bias for gold and silver miners is just, to me, common sense. Again, WPM, Wheaton Precious Metals, one of the big boys, gain only there was 12, but it's gone up a significant amount. The bigger ones tend not to go up exponentially. The ones that do well are the smaller ones. And EXK, as you know, was the best one I had last year. That's currently down as well. I was doing a bit of research on this morning. Technically, we're back. We've had an M2 breakout. I bought, and then I did actually buy some the other week in here. I'm cost averaged in well down here. So that was an area. I had an alarm set there yesterday. It went off. An area to consider to buy at $4. And at $4, it would give you 33% to its recent high. So be creative. Look at different markets. If things look tricky on Forex, go off and find other things or just study. I am currently studying copper because copper has made new highs. And the gentleman I was telling you about before, this bubble report, he tracks copper as a lead for silver. And he was talking about this the other day, that where's the actual copper symbol gone itself? So I am looking at a few. I haven't done any research on this. Don't go running off to buy any of this because I couldn't comment. This does look interesting as an ETF for copper miners. But I say I'm just looking. And all the time I am looking at different things, different ideas to see what's going on. Now, we had the question from Andrea, I think it was. Where's he gone? Antoine. And he was asking about bonds. The bond market, as he said, is complicated and he doesn't understand it. First things first, for everybody, sometimes when people ask us questions, we used to go off to Google. And sometimes now, if somebody asks me a question, I go to ChatGPT. It tells you in a second what you need to know in a simplistic way. And I just said, look, I just need a simple explanation of how the bond market works. And as you all should know by now, it's the governments, all governments run on debt. They issue bonds and agree to pay investors interest. And so that's what's explaining in there. And then also, I asked it for how does a traditional 60-40 investment portfolio work? This is something I have never been fond of. And as explained recently, I am not big on buying normal dividend stocks anymore because the dividend is rubbish. And if stocks tank this year, which I think they may well do, and there's no benefit from the dividend, it's a lose-lose to me. The whole point with bonds is that traditionally they would make up 40% of a portfolio. The reason being, the idea is that you would try to make profit from the stocks, and then as a stopgap, a fallback, the bonds would be your security and would pay a little bit of interest. The cynic in me says that for the managed funds, it's quite easy because if they're managing $1 billion, they stick 400 million in government bonds. It gives them a lot less work to do, and they still charge you a management fee. But has been the plan for the last 100 years. 40% in bonds, 60% in stocks. If you're young, put 80% in stocks and 20 in bonds. But again, I had an interesting chat, another podcast the other day with a Canadian guy, and he's 30 and has built himself up a stocks portfolio of 300 grand since university, which is very good. But the dividend yield that people are getting out of these things are not great. And even if you've got $1 million in your pension fund, The average for the aristocrat ones is only about 3%. It's terrible. And so therefore, when you come to retire, what you don't want to do is your portfolio, your balance to be being eaten away every month, because if that starts to go down significantly, then you will start to be looking for a job to fill shelves in your local supermarket, even with 1 million in the bank. Now, this is the 10-year Treasury note for America. So America at the moment is paying out 4.25% for you to lend money to the American government for 10 years. So each year it will give you 4.25, and then at the end of the 10 years, it will give you your money back. Again, I think that's a very poor return. The theory going, though, that America is the reserve currency of the world, it's as safe as houses, forgetting 36 trillion, and soon to be 37 trillion. But the theory being that the American government will always pay, although there have been some Republican politicians over the last few years occasionally mentioned perhaps defaulting on the debt, which sent shivers down the Chinese spine because they owned lots of it. So they have to pay. So for the American government, they want this to be as little as possible, because the higher that this goes, and it did in November when it was up at 5%, it means more of the money that the government takes in tax revenue is going to just pay the debt. Now, here is a chart of the different countries. So if you look on here, America's paying 4.17, UK's paying 4.6, etc. Down here, Turkey's paying 31. Well, that's easy. We'll just go off and buy Turkish bonds. Why would you be wary about buying Turkish bonds at the moment? Anybody? Tell me. Why would you not just go and buy Turkish bonds? They're paying 31%, guys, to lend them money. It's a no-brainer. Nobody. Turkey at the moment, once again, politically, looks to be on the verge of civil war again. Political tension, as Ashley says quite rightly. Erdogan again rules with a rod of iron, has a habit of jailing his opponents, which is becoming a recurring theme in Europe these days. Turkey, I think now is classed as being in Europe, although it was always said to be the gateway to the East. Politically, lots of tension, instability. People don't want to lend money when it's unstable because, hey, you might not get your money back. Whereas if you give your money to the Americans, you're guaranteed to get it back, he said tongue in cheek. And then Brazil's paying 15% because it's higher risk, Russia, etc. So you get the idea. South Africa is only paying 11, which is surprising. I would have thought, in view of the tensions there politically, they would be having to pay more. Because do you want to lend money to a government that appears to be institutionally corrupt, and the electricity system doesn't work, and politically it's becoming more unstable? That seems quite low for South Africa. I don't know if we've got any South Africans with us this morning. Tell me if I'm right. Tell me if I'm wrong. Push back. If you think I'm wrong, tell me. And so that's those. And then, of course, the big fear is what we had in 2013 in Cyprus, when the Greek bonds were up at 10%. Why? Because it was a bad risk. Because they basically, I think they'd fudged the figures on the way into the EU, so they never really actually met the threshold to be invited in. But then what was going on as well, Deutsche Bank and Paris Bank were buying Greek bonds, even though they were classed as junk at 10% plus, because they were high risk. And from what I've read is that when the bailout came from the EU, that most of the money that was supposed to go to Greece actually went to the aforementioned Deutsche Bank and Paris Bank to repay them, which again, whether that be within the law or the spirit of the law in the EU, I do not know. But certainly which was not within the law was that the EU told the Cypriot banks to take 60% of the monies from people over 100,000 in the bank. So if you have more than 100,000 euros in the bank, they took 60% of your money and converted it into stock in a worthless bank. And this is why when you have it in America, the government guarantee up to $250,000. In the UK, I think it's £85,000 and generally 100,000 euros in Europe. But when this happened, initially, the EU were quite okay to say to the bank, take 6% off everybody. So if you had $1,000 100,000 euros in the bank, they were going to take 60 off you for your contribution to help with the bailout. After this went on, then they limited how much you could take out in a week, and that went on for a few years. I don't know if any Greek members with us here today, but for years afterwards, they halved the pension payments. So I think pensions in Greece went down to about 400 euros a month. They limited how much money that anybody could take out of a bank on a daily basis in cash, because everybody wanted to pull their cash out. So very scary times, and that's to do with the bond market. Now, another question that Antoine asked, why would anybody, for example, buy a Swiss bond? The Swiss are paying out 0.47%. So you lend your money to them. I think it's a 10-year note. So for 10 years, let's say you give them 100,000 and they're going to give you peanuts per year. And at the end of 10 years, irrespective of inflation, they'll give you your 100,000 back. Why the heck would anybody put money in Switzerland? Any ideas? Actually, I just read Zoe's note about Turkey. Why? I said, why would they not lend them? She said, it's a crap currency. That was not very ladylike, Zoe. Crap currency. And this, about 5 years ago, German bonds were paying minus, and actually the Swiss were paying minus at one point as well. I don't know if we can go back on here on a weekly. I seem to remember Switzerland was here. Switzerland in 2021 was paying minus 0.5%. So you lent money to the bank and they charged you to have it. Why? Because the Swiss didn't want your money. They didn't want any more money going into their account, so they don't want it. But other people and companies would rather put their money with the Swiss because they are politically stable. They've avoided wars for hundreds of years. They have a strong economy. They have very little debt. And therefore, it is probably the ultimate safe haven. But hey ho, that's Bonds 101, very simplistic, Antoine. I know it doesn't answer your question in too much depth, but I hope I've kind of given you an idea of why it does it. And then on here, what did we talk about? Oh, this was talking about the silver squeeze. So again, I've mentioned this to you earlier. And again, mark to market, get in the habit of reading this. He's explaining about equities and rates. One of the other questions from Anton was about interest rates and why mark to market is calculating they're going to come up or down. That's what the experts are looking for all the time. They're all trying to work out whether the Fed are going to put rates up or down, and they listen to the news and they're listening to what Powell has to say. So when the data comes out, so for example, this week, the Aussies, it was expected to come out at 4.1. It came out at 4.1. I don't think there are any dissenters. It doesn't tell you with the Australians whether any of them dissented. So everybody's trying to guesstimate whether it's going up or down. If these interest rates go down, then bonds will go up, because if the banks are paying out rubbish money, then you get a better return if you lend money to the government. And then, talking of governments, there was an article today in the Telegraph. I don't know why I'm getting ads from. Actually, I do know. A good friend of mine's mad on motorbikes, and I was talking to him the other day on my phone, nowhere near home, and now getting adverts for motorbikes. So the American government are telling the UK that if they don't stop putting people in prison for 30 words and saying things and even thinking things, and this lady, whether you agree or not with abortion, she had a notice near an abortion clinic saying, here to talk if you want, and they arrested her, and she's been to court, and she's going to find out by the weekend whether she goes to jail or not. And you might think that's silly and that's extreme, but the things that are going on in the UK at the moment are terrible, and they are silly and extreme. And just to show you one, this here is 6 cops, 3 cop cars in the background. So this must be a drugs raid, mustn't it? This has got to be a serious crime that's taking place here. Oh no, it's 2 parents who are complaining about the school where their daughter went. I think the daughter's autistic, so she has challenges. So they sent them various messages. The school said they would only communicate with them via email. Then they found out something in a WhatsApp group. 6 police turned up and arrested these parents in front of their children, 3-year-old and a 6-year-old, stuck them in a cell for 8 hours each. and then finally let them off. And after another 5 weeks, decided there was no case to answer, so they've let them go. What the hell is this about? This is absolutely, utterly nuts. And it is happening more and more in the UK, and it's quite terrifying. And this is the podcast I was doing with Robin Special, and real fun guy. He's one 30-year-old with 300,000 in his fund. But we were talking about that. He was trying to get me into trouble by talking about what's going on in the UK. But I was explaining to him as well about how we left the UK with a suitcase each 25 years ago to go live in the Canary Islands, but we had a plan. And then Politico. So Le Pen, Marie Le Pen, the probable next president of France, has suddenly been convicted of financial fraud. Not that she's personally benefited from it, but financial fraud. So you may say, well, okay, that's fair enough. If she's done it, then she should not be allowed to stand in Parliament. But it is rather convenient that Ms. Le Pen has been arrested and charged, because when Christine Lagarde was involved in and found guilty of negligence in approving a massive payout of taxpayers' money to a controversial French businessman, she faced a 15,000 fine plus a year in prison, but the court decided she should not be punished and the conviction would not support a criminal record. And then she went on to run the IMF, and she now runs the ECB. So could it be that they are just silencing their political opponents? Well, the election in Romania has been cancelled. The EU don't like the result, and the EU have a habit of this. The French in the 1990s, I think it was, voted against, I think it was the Maastricht Treaty, and the French government, I think the French government just ignored them and did it anyway. And then the Irish objected in a referendum for the EU many years ago, and the governments didn't like the results, so they made it best of three, which is why Farage, when the Brexit vote went through in the UK, said this is not the best of three. So all of this is going on in the background, all hard right. And then von der Leyen, the commissioner of the EU, there is a strong story about 30 odd million, or was it billion, of monies that was paid out for the COVID crisis. Some of it turned out that her husband may or may not have been involved and may have benefited. And then you could say, well, okay, maybe that's not true. So here they're kind of saying, well, it's not quite true. But then again, it's grey and it's messy and it's muddy. Oh, this one is saying that it's fact checked, it's not true. But even when you read through it, they kind of say, well, it's not true. But yes, the company that he worked for, was the director for, was not actually Pfizer, but it was owned by Pfizer. So it's all smelly and it's all murky and it all stinks, in my opinion. And that's what's going on. And I say in the UK at the moment, it's absolutely insane. They let out a violent criminal to make room for people who've made posts on Facebook, and he killed somebody the next day. Government don't give a toss. Anyway, I shared with you last week, I have got involved in this. This is nuts. I have now I've invested a bit more. I think I've invested about $6,000 so far. This is high yield ETFs. I showed you in a previous webinar what I'm doing. Tesla, I only have half stake in Tesla, and I also have a stake in Tesla short, paying out 72% per annum. The best one at the minute is, I think it was 112 now, 121 to short Tesla. So it's crazy, it's nuts. Look back at last week's live training session if you don't know what it's about. We thought that UK residents couldn't do it. Having said that, they have now come out with, if you go to yieldmaxetf.com/Europe, allegedly now they have passed the rules, and you should, in the EU and the UK, should be able to take part in this. So if you are interested, and you're from the UK or Europe, get over there, talk to their support, find out where you can get involved. As ever, not financial advice, but it is from my other website, which is yourinvestingfuture.com, which is there. And for members of there, I'm tidying up the Telegram group in the next few days. So anybody whose membership is coming up for renewal, need to get on with it. Otherwise, you'll be not in the group anymore. Any questions? Hi, John. You got out of Thailand just at the right time, didn't you, my friend? John's been diving in, I think, Thailand, wasn't it? But thankfully got out before the earthquake.